Oh my God, this could genuinely change day trading forever. FINRA just approved rewriting the current PDT rule, which is something that day traders have been begging for decades. If you don't know what the PDT rule is, it is the pattern day trader rule, and it limits you to only 3 trades per week if you don't have $25,000 sitting in your margin account. This is by far the biggest restriction that stops small traders from truly reaching their potential. But here's the crazy part. The proposed change would lower the requirement from $25,000 to only $2,000. That is not just a small tweak, that is a complete game changer for retail traders. Let's break down what this means, what still has to happen for this to be approved, and how this is going to open the floodgates for a whole new generation of retail traders. So let's talk about the PDT rule, and let's talk about how this potential change could be transformative for day trading and how this is going to impact already existing traders. So the PDT rule, which is the pattern day trader rule, it limits you to only 3 day trades per week if you have less than $25,000 in your margin account. If you have more than $25,000, well, you could do really as many trades as you want. But this is extremely limiting, especially for the average retail investor. And if you go to this rule, it is actually Rule 4210 of FINRA. These are the margin requirements that all regulated brokerages have to follow. And you go down to initial margin, you could actually find the rule right here. The minimum equity requirement for a pattern day trader, that's someone who's doing more than 3 trades per week, is $25,000 pursuant to paragraph blah, blah, blah. So this only applies to margin accounts, by the way. So this rule does not apply to cash accounts. And you might be wondering, okay, well, why don't I just trade on a cash account? So cash accounts are also pretty limiting as well. Number one, you can't short on a cash account. And for me, I would say at least 50% of my trades are going short. I like to go in both directions, depending on whether the market is up or down. And you also have to wait for your cash to settle when you're using a cash account. So let's say you have a $10,000 cash account and you use $5,000 on a trade. When you exit that trade, you can't use that $5,000 again that day or even the next day. It usually takes a few days for that cash to settle. You could think of it as like depositing a check into the bank, right? That check doesn't land in your checking account until like a few days later. It takes time for that check to settle and hit your account. That's kind of like how it works with cash accounts. So if you want to be an active day trader, you basically need a margin account and you need over $25,000. And this is something that's been extremely limiting really since 2021. And they created this rule in 2021 after the dot-com bubble to essentially protect small traders who were quitting their jobs. They were trading these crazy stocks. The markets were extremely volatile and people were losing money left and right. But this was 2 decades ago. And regulators basically just wanted to protect inexperienced traders from crazy risk, from over leveraging and just losing all of their money. The stock market crashed an absurd amount during that dot-com boom. So this was basically a way for regulators to protect smaller retail traders. So as of late December, the FINRA Board of Governors announced the approval of 4 rule proposals, and they approved proposed amendments to FINRA's pattern day trading rules. And if you look down here, the board approved amendments that will replace the day trading and pattern day trading rules, including the minimum equity of $25,000 for pattern day traders. And keep in mind that a pattern day trader is a trader who takes more than 3 trades per week. Now, although this is a massive step forward, we still need to wait for the SEC to give the final green light, and the SEC needs to approve this before brokerages could actually begin changing their margin requirements. So this is the last thing that we're waiting on. Literally just these amendments need to be filed with the SEC, and the SEC needs to approve them. And from what I understand, it feels like that some of the biggest brokerages have actually pressured FINRA to making this change happen. If you look at Traders Magazine, this is a recent article that was published. We have Charles Schwab, which is actually my personal brokerage account that I use. the firm urged FINRA to eliminate these requirements, which it described as unnecessary regulatory burdens. Even Interactive Brokers added its voice to the call for modernization, and that FINRA should permit broker-dealer firms that use a real-time margining system to compute their clients' day trading buying power based upon the client's real-time excess margin. And we could see that Robinhood as well, right? They mentioned that FINRA should eliminate the day trade count as a determining factor for pattern day trader designation. So some of the biggest brokerages and financial institutions want this to happen. And I think this is massive. I think this is going to be transformative for the day trading space. And let's talk about why. So the first and most obvious implication of this, it's going to lead to a significantly lower barrier of entry for the average retail trader. When you compare day trading stocks to other styles of trading, like trading crypto or Forex or futures or options, with a lot of those styles, you could even use prop firms if you don't have capital. But when you're day trading stocks, you need $25,000 in a margin account to do more than 3 trades per week. That can be extremely limiting. Not everyone has $25,000 to put in a margin account. So I think we're going to see way more retail traders begin trading shares. And I think that's going to add significantly more liquidity into the markets. And I'm about to explain why that extra liquidity could actually be very beneficial, especially if you're an experienced and skilled trader. And now, literally anyone can day trade. Anyone could put $2,000 into their margin account and begin trading. And I think we're going to see a massive influx of the average retail trader entering into the stock market. And I think we could see a lot of potential brokerage competition with this sudden influx of retail traders. Well, I think brokerages are almost going to compete and fight with each other for those new accounts. And I think we're going to see brokerages incentivize those new retail traders to use their brokerage over other brokerages. So I think this is going to lead to a ton of innovation in the day trading space, where brokerages are going to be forced to adapt and compete and provide better tools and maybe even provide better price improvement. And if you don't know what price improvement is, this is when your brokerage gives you a better fill on your order than you were supposed to get. And that better fill could be massive for your trade. And maybe brokerages that now don't offer price improvement, they're going to have to be forced to, because other brokerages are providing it, and they want to compete, they want to keep up, and they want to also attract this new sudden influx of retail traders. So I think this could be really beneficial for the day trading space if brokerages are now updating their platforms, creating better tools, and creating more incentives for traders to actually use them. All right, and I think we're going to see a new era where retail traders are going to dominate, and retail traders are going to come back more powerful than ever. And you could think of like 2020, 2021, it felt like everyone was trading on Robinhood, and there was an explosion of retail traders. I think we're going to see something similar to that, especially going into 2026, and especially if the market continues its kind of bullish momentum. And all of a sudden, millions of new retail traders suddenly have the ability to trade freely. That's going to be huge. And you have to keep in mind that more participants equals more action, equals more liquidity, equals more opportunities for scalpers and momentum traders. And I am a scalper. I'm a momentum trader. So I think this is going to be really beneficial for me and for everyone who trades kind of my style of trading, because I trade shares. And I think specifically, this is going to be really good for small caps, for penny stocks, and for big momentum names. You could think of like the meme stock kind of explosion a few years ago. Even now on Reddit, there's some like random stocks. I think there was a few weeks ago, a couple of random stocks exploded because they were big like Reddit stocks. I think we're going to see a similar explosion just like that, especially as interest rates start to go down and the business cycle kind of progresses and improves, and there's a lot more confidence in the economy. I think we're going to see a 2020, 2021 retail boom, and we're going to see stocks just popping off, and we're going to see so much momentum in the markets because now there's way more market participants. And also, increased trading frequency equals more momentum. That means sharper moves, more opportunities, faster reversals, more breakouts, and more potential scalps, which I'm very excited about. So I think this is going to be massive. And I think this presents almost an opportunity because if the SEC passes this, right, it's probably going to go into effect in 2026, probably either early or mid 2026. So I would say this is the time to master day trading. This is the time to paper trade, right? So maybe if you don't have $25,000 in your account or you don't have an available 25K, you could paper trade, you could build the skill set right now. And then when this rule does go into effect, you're able to begin taking advantage and you can begin making money. That's the whole kind of opportunity of this, I think. And even if you do have 25K, if you can hone in on your skill set now and master day trading and really, work on your system, by the time we have this massive explosion in retail participants, you could be in a position to take advantage of that. And if you don't know where to start, I have hundreds of hours of free education on the internet, not only on this YouTube channel that you're watching right now. I highly recommend watching my other videos if you want to learn, but I also have a free 10+ hour trading course that is genuinely better than most paid courses on the internet. It will build the foundation for your trading, and it could put you in a position to take advantage when this rule hits and when all of a sudden we're seeing a lot more action in the markets. So yes, I think this is going to change trading forever. I think this is going to be amazing for the space. The only downside that I can think of is if there's a lot of new retail traders, well, a lot of those retail traders aren't going to manage risk. A lot of those retail traders aren't going to know what they're doing. They're not going to invest in themselves and invest in actually focusing on their education. So that's one downside. A lot of those traders might lose money. However, that's kind of on them. It's up to them to put themselves in a position to succeed. But I think this is going to be amazing for experienced and skilled traders because all of a sudden there's way more retail participants, there's way more momentum and action and stocks actually moving. And whenever we see movement, that's opportunity. Let me know in the comments what you think about this proposed rule change. Let me know if you think if the SEC is actually going to pass it. And do you think this is actually good for the day trading space? And make sure you leave a like. Make sure you subscribe to the channel. If this is the first video that you're watching from me, I highly recommend watching my other videos because they're very educational and they will help you succeed with day trading just in time for this rule to actually pass. So I will see you in the next video. Thank you so much for watching. Goodbye.